Alright, hi everyone. Welcome to today's pre-market live analysis brought to you by IC Markets. I trust you've all had a great weekend. Alright, okay, so let's get things going. Right, before we start, as usual, please take note of the disclaimer, right? This is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry significant risks and you should only trade with money you can afford to lose. Right, so before we dive into the charts and trading view, we'll take a quick look at the economic calendar for this week. Right, we'll highlight some of the key stuff to watch out for, and then we'll begin the analysis on the dollar index, the major currency pairs, the indices, commodities, and any other instruments that you would like to see as well. Right. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Alright, so now let's head on over to Forex Factory, take a quick look at the calendar for this week. Right, so there's quite a few things going on, but I just like to point out the monetary policy statement announcement by the RBNZ, the Reserve Bank of New Zealand, that's going to take place on Wednesday, 14th of August, 2 a.m. GMT, followed by the press conference by RBNZ Governor Adrian Orr at 3 a.m., so an hour later. So the official cash rate in New Zealand currently stands at 5.5%, right? You can see here this has been in place since last May, right? So based on the last meeting that took place in July, policy makers kept the cash rate on hold for the 8th consecutive meeting, and they have concluded that monetary policy has remained restrictive enough to ease capacity pressures and reduce CPI. Well, CPI back then fell to a 3-year low of 4% in the first quarter of 2024, but it still exceeded their target range of 1 to 3%. But looking at the latest figures, right, this is the headline inflation rate, CPI falling to 4% in the first quarter of 2021, but in the second quarter it has continued to ease further, dropping down or slowing down to 3.3%. So you can see here from its peak in in the middle of 2022, CPI hitting 7.2% year over year. It has now eased significantly down to 3.3% in the second quarter of this year. And when we look at core CPI as well, that's eased down as well. It was 3.7% in the first quarter of 2024, down to 2.8%. So we've seen inflationary pressures ease quite significantly. In New Zealand, however, it still remains above the target of 1 to 3%. But because economic activity has been pretty poor as well, right? Remember, New Zealand fell into a technical recession in the second half of last year. So you can see the third and fourth quarters of last year, economic growth declining, right, or rather contracting. It contracted 0.6% in the third quarter and 0.2% in the fourth quarter. There was a nice rebound in the first quarter of this year so far, with economic activity rebounding to 0.3%. But overall, economic output has been poor. Inflation appears to be heading in the right direction, right? But we still see a forecast of 5.5% for the RBNZ. So that means they're quite likely going to keep rates on hold once again at 5.5%. But the press conference and the statement could be is going to be equally important as well, right? If the press statement as well as the press conference convey a dovish outlook on future monetary policy action, right, that could cause the Kiwi to come under pressure late on Wednesday. So take note, although they may not cut rates at this week's meeting, a dovish statement and press conference should be more than sufficient to cause the Kiwi to come under significant selling pressures, right? Then we've also got inflation data out of the US. We've got PPI data on Tuesday and CPI data on Wednesday. PPI is going to drop at 12:30 p.m. GMT on Tuesday, 13th of August, while CPI drops at the same time, but on Wednesday, the 14th of August. Right. So of course, inflation data is going to be closely watched as well. right? PPI, which measures producer price index. This is the level of or this tracks the level of inflation in the wholesale sector. When you look at core PPI on a monthly basis, right? uh, this June's figure uh, rose by 0.4% month over month, coming in higher than its forecast of 0.2%. But for now, in July's reading, we see the as forecast show just a modest rise of 0.2%, similar to what we saw in the beginning of this year as well, or the second quarter of this year. Core PPI is also, or headline PPI is also expected to rise 0.2% in July, similar to similar to June's increase as well. So PPI has sort of, and when you look at it on a monthly and annualized basis, has sort of eased as well over the last couple of months. And another round of softer PPI reading combined with CPI is most definitely going to cause the dollar to potentially come under selling pressures as well. So we could see the dollar index pull back quite sharply on Tuesday and Wednesday. Right, CPI as well has eased significantly in the US after accelerating the first quarter of this year. Second quarter saw some slowdown as well, and we've seen that continue into June as well. June's reading saw the core CPI eased to 3%. Right, it was previously at 3.3% in May, and it eased to 3% in June. So once again, consumer inflation is heading in the right direction as well. Right. Okay, so just watch out for the RBNZ and US inflation data. Plus, we've also got the labor force report out of Australia. That's on Thursday, 15th of August, 1:30 a.m. We've got UK GDP as well. That's on 6 a.m. on Thursday, 15th of August. And of course, we have retail sales out of the US on Thursday, 15th of August, 12:30 p.m. And finally, we've got retail sales out of the UK on Friday, 16th of August at 6 a.m. So quite a few things going on, but just wanted to bring your attention to the RBNZ monetary policy announcement, as well as inflation data out of the US, both PPI and CPI, right? And of course, in the UK, we've got the claimant count change as well. So we have the labor force report out on Tuesday, 13 August, 6 a.m. Alright, okay, now let's dive into the charts and trading view. We'll begin the analysis with the dollar index. Look at a couple of the major currency pairs, the commodities, the indices, and of course any other requests that you have as well. So do drop your requests in early in the chat box, and I'll be more than happy to go through the analysis with you. Alright, hi, yeah, good to see you as well. Alright, okay. So, as we can see here, since 27th of June, right, the dollar index, after hitting a high of about 106.10, has reversed to drop quite sharply, dropping as low as 102.15 on Monday, 5th of August, right? So, at the end of June and mid-July, right, we had a combination of softer CPI and PPI readings, a slowdown in ISM's manufacturing and services reports as well, PMI activity, ISM PMI activity slowed in the prior months as well. So combination of a slowdown in ISM activity, slower CPI and PPI data, saw the dollar pull back quite strongly over this period, right? And of course, last week, right, we had another strong sell-off as well, as we saw non-farm payrolls. Right, we had non-farm payrolls released on it was the 2nd of August, right? 2nd of August, Friday, we had non-farm payrolls released as well. We had a pretty poor jobs data out of the US, combination of ADP data, unemployment claims, the non-farm payrolls report, and unemployment rate edging higher, all of which triggered a strong sell-off in the US dollar. But last week, of course, the dollar index stabilized, right? It opened on after dropping as low as 102.15 on Monday. It has recovered quite nicely, rising as high as 103.57 on Thursday, before finally closing at 103.15 last Friday. So we could potentially see this dollar index resume, right, as we may as markets open later today, right, in about 45 minutes, as markets resume open, right. And also because we have inflation data out of the US. Remember, we have PPI data on Tuesday and CPI data on Wednesday, right? If both of these show inflationary pressures dissipating further in July, right, for the month of July, we are quite likely to see the dollar index pull back towards the pivot here again. So although we've seen the dollar index recover and retrace higher last week, right, because we've got inflation data, and should inflation data come in softer once again, right, this could cause the dollar index to sell off, and we are quite likely to see that this index pull back towards the pivot at 102.63. The pivot is a significant multi-swing low support, right. We see a nice swing low support taking place here on the 11th of March, right. And also, actually, if I were to just stretch it all the way out, right, stretch it all the way back to beginning of Jan, it's also an overlap level as well, right. If I look here, I drag it all the way here, right, we can see previously a nice overlap level being formed on 8th of March, right. This level at 102.66 previously functioned as a pullback resistance level here in the first week of January, after which it proceeded to function as a nice swing low support here in the second week of March as well, right. This creates an overlap support level, and it's something where we have seen price sort of stabilize last Monday as well. Of course, we can see the wick dropping as low as 102.15, but you can see the body of the candle here closing at 102.66 does signify a continued support area over here as well, although it's not the strongest support area now, especially with this wick dropping as low as 102.15. But generally, you get the idea that this is a pretty significant overlap level that has a swing low here on the 19th of March, and another generally pretty steady swing low here formed last Monday as well. Right, so that's how the pivot for this week has been identified at 102.66. It is an overlap or swing low support level that could cause cause the dollar index, or could give the dollar index some support should we see it return down to this level once more. So remember, PPI data on Tuesday, CPI on Wednesday, both of which, if they continue to show inflationary pressures dissipating further in the US, we could see the dollar index sell off once again, and it could potentially drift down towards this pivot level here at 102.66. Now, looking a little bit below, right, I see a nice pullback support level at 102.15. Right, this pullback support level here took place at the end of, right at the beginning of January, right, in the first week of Jan, as dollar index reversed strongly and bounced higher. In the beginning of the year, it sort of consolidated at around 102.35, finding support just above 102.12, which is a nice pullback support level here. It is also a level where we can see the dollar index touching last Monday before reversing and bouncing off this level. This pullback support level here also has the presence of a 78.6% Fibonacci retracement, right? So we can see we started this retracement from here, this swing low on the 28th of December, going up to the high here on the 16th of April. We can see the 78.6% retracement levels sitting slightly below this pullback support at 102.15, creating a relatively strong support zone between 102.15 and 102. So that's how the pivot and first support has been identified. Then moving now over to resistance, we can see as the dollar index was falling in mid-July, falling very sharply, it managed to stabilize and find support around 103.66 and reverse to retrace higher as well. So this is a nice pullback support level that took place on the 18th of July. So what was previously a support level could now potentially function as resistance. So that's how the first resistance has been identified. It's a pullback resistance at 103.66 and also has the presence of a 50% retracement. So right, this Fibonacci retracement level was found by starting from here on 30th of July and ending at the low of 5th August. We can see the 50% retracement sits at 103.48, pretty close to where the first pullback resistance has been identified at 103.65. So we see a pretty decent resistance zone as well that begins from 103.50 to 103.65. And take note, the cloud is red in color as well. The Ichimoku cloud is red in color, and with the dollar index continuing to trade underneath the cloud, it highlights the bearish momentum for this instrument as well. And also we can see a pretty decent descending trend line as well, right? There's a pretty decent descending trend line that we can see as well. Maybe it's even a channel. Let me see if it's a bullish channel that we can sort of a bearish channel that we can sort of identify here. Right, actually we can see it actually break out of the bearish channel last Monday, right? So okay, this is not the, it's actually broken through the lower trend line, so that's fine. Let's just remove the channel but leave the descending trend line here on as well. So we can see we have a combination of the descending trend line. We see the dollar index continue to trade underneath the bearish Ichimoku cloud, and of course we can see very clearly a series of lower highs and lower lows, clearly demonstrating that strong downward or bearish momentum for this index, right? So, and especially with CPI data and PPI data out of the US lined up on Tuesday and Wednesday, right, we could see this this index move down lower as the week progresses, especially on Wednesday as well. Higher potential for the dollar index to pull back quite sharply should we see CPI figures ease once more. All right, now let's take a look at the euro. We'll also of course look at the Kiwi, right? We've got RBNZ coming up on Tuesday, so we'll definitely take a look at the Kiwi as well. Alright, so if the dollar index is going to be pulling back, right, if we expect dollar index to be pulling back, and we can expect the euro to push higher as well, right? We see the euro hitting a high of 1.1008 on Monday 5th of August before pulling back, right? So I believe we are likely to see the euro push higher, so we're going to see it move up towards the pivot here. There's a nice pivot level that I see. Right, so I see a nice pullback resistance and swing high resistance, as well as a nice pullback resistance here that took place at the beginning of second week of January. We see a nice swing high resistance here taking place in on 8th of March, and we see another pullback here taking place on the 5th of August. You can see quite clearly this is a pretty significant resistance barrier here for the euro at 1.0998. So that's where the pivot has been identified, because if we're expecting dollar index to pull back this week, right, then of course we should be looking at the euro climbing up towards this pivot once more. So this is where it could potentially run into resistance and make a slight pullback. So where it could find support, right, should it reach the pivot and start retreating away from this level, there's a nice pullback support level here that can be identified at around, it's pretty decent, not the best, yeah, it's not really the best pullback level, but it's probably somewhere around here, which is at 101.0832. We can see this level being tested last Thursday as well. The euro bouncing on this level quite nicely, and it could potentially continue to retrace higher or climb higher this week, right? So once again, right, if you're expecting dollar index to pull back this week, because we see a potential softer PPI and CPI data out of the US, right, then we are quite likely to see the euro climb higher, and this resistance area at 1.0998, which has been identified at this week's pivot, this is a level where we could see the euro rise once again. So if we do see the euro rising this week using this pivot, we can identify a potential take profit zone for any long euro trades around this region here, right, around this region here at 1.0998 is a good zone to identify as a potential take profit zone for any long euro trade that we may have this week. And looking at resistances, right, there's a clearly we see a very significant swing high resistance taking place here on 28th of December, with the euro rising as high as 1.1140 on the 28th of December. A strong resistance zone here, so that's quite clearly easy to identify as well, and with a potential pullback support level at 1.0882. right? We can also run a Fibonacci retracement here on this uptrend, right? We can run a Fibonacci retracement starting from here, this swing low on the 1st of August, hitting the high here on the 5th. Let's pull up all the fibs. We can see that there's a 50% retracement that aligns pretty close, and there's also the 61 as well. But you can see that this wick here on Thursday 8th of August dropping below the 50%. So I think I'm just going to more inclined to use the 61.8 to retracement level to add further significance to this pullback support level here. So we have a pretty strong pullback support zone that begins with the 61.8% Fibonacci retracement that's at 1.0855 up to this pullback level here at 1.0837. So 1.0866 to 1.0880, right? Pretty strong support zone. And at the same time, you can see the euro trading above the bullish Ichimoku cloud, right? We can see the euro trading above it and making a series of higher highs, higher lows, right? Quite clearly, the on the longer term, the trend is to the upside, and we could see it reach this resistance barrier here at 1.0998, which has been identified as the pivot. So this is a pretty decent zone to identify as a potential take profit zone for any long euro trades, right? Okay. Right, hi, yeah, you have a question. Let me see, what is it? What is the timing rule for opening a position based on the correlation? Right, there's no real timing rule, I should say, right? There's no real timing rule. You can use like the higher time frames, like the daily time frame, for our time frames to establish the trend, right? To establish the trend and identify and establish the correlation or inverse correlation. And then you can use like the 30-minute time frame to identify the entry point. So for example here, for today's context, right, if we do see the euro or rather if you see the dollar index sell off at the beginning of the week, right, I'll be looking and especially if the euro manages to stay above 1.0885, right, this would probably be an area here that I'll be looking to enter, right, if it can stabilize at around current levels, or if it does pull back a little bit and manages to stay above the first support, this is an area where I can identify a potential buy entry, and then I would target the pivot as a potential take profit zone. And at the same time, my stop loss, I'll identify the stop loss slightly below the 61.8% Fibonacci retracement. We see a nice pullback level here taking place on Thursday 1st of August at 1.0787, but this level is simply too far, right, to identify as a potential stop loss level. So in this case, in this scenario, I'll be looking at the 61.8% retracement level to identify my stop loss slightly below the 61.8 retracement, with a potential buy entry at around this zone and about just above the first support here, and then targeting the pivot. Yeah, so there's no real timing rule for opening a position based on correlation, right? And it really depends on how the prices hold up and when they start to move, right? When we look at stochastic and RSI, right, on the top here I have the RSI indicator, on the bottom here I have the stochastic oscillator, right? We can sort of use them to help us determine entry and exit points as well, or potential turning points, right? We can use them to identify potential turning points. And what do I mean by that, right? For example here, if you look at it on Thursday 1st of August, we see the RSI dropping as low as 43, and RSI dropping as low as 43, and stochastic oscillator dropping as low as about 23, right? In this period here, they are sort of indicating oversold conditions, right? They're not indicating extreme oversold conditions just yet, but they did hint at oversold conditions, and this is where we could see the euro stabilize at around 1.0719 and reverse to go higher. And if you actually look at it on the 4-hour time frame, right, if you look at these two indicators on the 4-hour time frame, right, they really did indicate pretty good oversold condition here, right, with stochastic oscillator dropping as low as dropping under 10 here on the 1st of August, and RSI dropping as low as 37, indicating oversold conditions. So when you have a setup like this with the RSI and stochastic oscillator indicating oversold conditions, we can expect this instrument with, or in this case this currency pair, to stabilize at current levels, and we should be looking out for potential bullish bounce, right? So if you're looking at for potential bullish bounce or bullish reversal, which is what did occur on Monday, right? It took a while, but after that, on early Monday morning, we did see the euro climb higher, and especially when both the RSI and stochastic indicator here indicated overbought condition, right? Then later we had a signal for an overbought, potential overbought condition here. RSI hitting as high as 79, stochastic oscillator climbing above 90 as well, both of which indicating overbought conditions. And then we really did see the euro stall at 1.0998 and reverse the pullback, right? So for now, if the euro can manage to stay above the first support, right, this would be a good buy entry opportunity around here. And then we'll target the pivot as the potential take profit zone, right, for the long euro trade. And of course, we can then use the combination of the 61.8% Fibonacci retracement, identify a stop loss slightly below this level here. So the stop 61.8 retracement sits at about 1.0865, right? We can give ourselves about a 15 pip buffer and identify a potential stop loss underneath this level here. So that would be at 1.0850 potential stop loss zone to identify, buy entry at around 1.0890, and targeting this resistance barrier at 1.0998 as a potential take profit zone. So you can see the combination of the RSI and stochastic oscillator on the 4-hour and daily time frames help us to identify potential turning points, right? They help us identify potential turning points. So as an example, when the euro was pulling back here in mid-July, right, reversing from 1.0943 and breaking under 1.08 as well, right? When you have, right, over this period here, when you then have on the daily time frame, the RSI and stochastic oscillator indicate potential oversold condition, although this wasn't a very deep signal as well, right? You see RSI holding up at about 43, stochastic dropping, coming close to 20. It didn't highlight extreme oversold conditions, but it was close enough to tell us that, okay, perhaps we should be closing our position soon, or we should be monitoring the short trade much more closer, right? As the euro was reversed off 1.0920 and was dropping, right? And as these two indicators start to highlight potential oversold conditions, this is when we should be monitoring the trade a little bit more closer. Perhaps you could close out the trade outright or run a much tighter stop loss as well. So in the event if price reverses as what we saw here on Friday, right, we are able to at least exit the position and for a pretty decent profit as well, right? So using these two indicators as well on the daily and 4-hour time frame help us identify potential oversold and overbought conditions, and which also gives us helps us to identify potential exit points as well, entries and exits, right? Okay, so that's what we have for the euro. Let's cover the Kiwi, and since we've got the RBNZ coming up on Tuesday, right? RBNZ is coming up on they're coming up on Wednesday, 14th of August, 2 a.m. They're expected to keep the cash rate on hold at 5.5% once again. However, the statement and the press conference could convey pretty dovish communication or pretty dovish outlook on future monetary policy action, and that could be enough for the Kiwi to come under pressure. So the Kiwi has rebounded quite strongly, especially on Monday, 5th of August, after hitting a low of 58.50. It has reversed very strongly, rising as high as 60.33 last Friday, right? So with RBNZ only coming up on Wednesday, right, we could see the Kiwi continuing to rise a little bit further, right? Rise up towards the pivot once again. And should we see a dovish statement accompanied by a press conference that hints at a potential rate cut at the next RBNZ meeting, we could see the Kiwi come under pressure and potentially reverse the pullback, right? So take note, the Kiwi could continue to rise higher for the first couple of days, rising up towards this pivot here. This pivot at 60.42 has been identified as a pullback resistance. that has the presence of a 61.8% retracement level. This retracement was found by starting from here, this high on the 8th of July, going down to the low here on Monday 5th of August. You can see the 61.8 retracement level aligns pretty well with this pullback support level here. This was previously a pullback support level that took place on 16 to 18 of July, after which it could potentially function as resistance. You can even argue here that last Friday it did function as resistance, creating an overlap here. So we see a nice overlap resistance level that has been identified as the pivot at 60.42. Right, and at the same time, the Kiwi continues to trade underneath the bearish Ichimoku cloud. So the combination of the cloud, the overlap resistance, which is the pivot, and the 61.8% retracement levels all point to a potential resistance barrier here. So we could see the Kiwi rise up for the first couple of days, and then if they keep their rates on hold at 5.5% while accompanied by a dovish statement at press conference, we could see the Kiwi come under selling pressures and potentially reverse around the pivot here and pull back towards this support level at 59.23. Right, it's a nice, pretty decent pullback support level that took place on Tuesday, 6th of August. Resistance is pretty clear, right, as the Kiwi was retracing a little bit higher in the first couple of weeks of July. It retraced higher, but it ran into resistance at this pullback level here. Right, it's a pretty decent pullback resistance level at 61.45 that has been identified as the first resistance here. Hi, morning, Ren. Alright, okay. Good evening, rather. Yes, we actually haven't covered the Aussie and pound yet, so we'll just do that as well. So let's cover the Aussie and cable as well. Alright, so this is what we have for Kiwi. So take note, Wednesday is the RBNZ meeting, where they could potentially communicate dovish a dovish outlook. Even though if they don't cut rates at the current meeting, there could be pretty strong hints of a potential rate cut at the subsequent meeting. So that could be sufficient enough for the Kiwi to stall around the pivot here and reverse the pullback. Alright, so now let's take a look at the Aussie. Right, so similar to the Kiwi as well, the Aussie was selling off quite sharply in the second half of July, right after coming close to 68 cents. The Aussie has reversed to drop as low as 63.50 last Monday 5th of August, but it has reversed very sharply off this level. Right, so it retraced as high as 66.05, and it could potentially continue to rise, continue rising this week. Remember, we're expecting dollar index to pull back, right, after retracing as high as 1.0355 on Thursday. We saw the dollar index pull back, and it's quite likely it could continue to pull back this week as well, and especially with PPI data on Tuesday and CPI data on Wednesday, both of which, if we see a softer set of data, is quite likely going to cause the dollar index to pull back. So if we do see the dollar index pulling back this week, then we could see the Aussie, of course, rise up towards its pivot here. The pivot is at 66.35. It has been identified as a pullback resistance. This was previously a pullback support level here that took place at the end of June, right, as the Aussie consolidated at around 66.60. It managed to hold up above this level here at 66.35 before bouncing quite higher here. So what was previously a pullback support level could now potentially function as resistance, and it also has the presence of a 61.8% Fibonacci retracement. Right, so we see this retracement level here found by starting from this swing high on the 11th of July, ending at the swing low, of course, here on Monday. We can see the 61.8% retracement aligns pretty well with the pivot here, so adding further significance to this resistance zone. And of course, the next major resistance for the Aussie is simply going to be this swing high resistance here in mid-July at 67.84, and I see a nice, pretty decent pullback support level here at 64.88. Of course, we can see this wick here dropping as low as 63.50, but generally you can see here that the body of the candles and most of the wicks managed to stabilize at around 64.88. So this is where the pretty decent pullback support level can be identified for the Aussie. So we can expect Aussie and Kiwi both to rise up towards their respective pivot levels this week, and especially for the Kiwi, right, with RBNZ dropping its monetary policy statement on Wednesday, we have a potential catalyst for the Kiwi to come under pressure, right? We could see the Kiwi come under pressure on Wednesday, and then we could see it potentially reverse around the pivot and pull back. Whereas for the Aussie, right, we could see it rise up as well towards its pivot, and then it could potentially be dragged down by the Kiwi as well. So take note, if the Kiwi does pull back quite sharply, it may drag down the Aussie with it as well on Wednesday. Right, okay, now let's take a look at cable. Right, cable as well has been in a strong sell-off since 17th of July, right, despite the dollar index selling off over the same period as well, right. The cable has been it has actually been much significantly weaker, right? That is why we've seen this currency pair pull back quite sharply as well, right? Despite dollar index falling, the pound has actually lost even more demand, right? So we are seeing the pound sell off quite sharply as well, and that's clearly being evident in the price action here. We see a series of lower highs, lower lows, very clear. I think we can probably establish a bearish channel as well. I think, yeah, we can probably establish a pretty decent bearish channel as well, right? And last week we saw cable test this upper trend line of the bearish channel. This is something we've seen it done a few times, right? We've seen it done it a couple of times here at the end of July, early August as well, but this time here we may see it break out of this bearish channel, right? Especially if dollar index continues to sell off, and if we do see cable break above the upper trend line of this bearish channel here, that's quite likely going to see it drive higher, drive up towards the pivot. And also this currency pair has found support within the Ichimoku cloud, right? The Ichimoku cloud is green in color, and typically when the cloud is green, it can function as a potential support zone as well, which is something that we saw here as well on February and 15 as well, right? We see a pretty decent support zone here, price finding a double bottom here at around 1.2536 before bouncing higher. Price also managed to stabilize within the bullish Ichimoku cloud, which is something that we saw last week as well. So midweek we saw cable sort of stabilize within the bullish Ichimoku cloud and stage a reversal, right? But remember, it still continues to trade within this bearish channel. However, there's a potential for a bullish breakout, so we may see cable break out of this bearish channel here, right? And then we have a potential bullish breakout, and we could see it rise up towards the pivot here. The pivot is a pullback resistance, and we see the pivot as a pullback resistance here. This level here previously was a consolidation zone here, right? As cable pulled back, dropping under 1.29, it's roughly stabilized around 1.2850 here before making another leg down lower. So what was previous support zone could now potentially be resistance, and it's also accompanied by a 50% Fibonacci retracement, right? So this retracement was found from this swing high here on the 17th of July going down to the low of Thursday, 8th of August. You can see the 50% retracement aligned pretty well with this pivot here, right? And if I were to stretch it all the way back, right, if I were to drag the pivot all the way back, it actually sort of lines up pretty well with this swing high resistance that took place on the 8th of March, this pullback resistance that took place on the 12th of June, and this consolidation period here on 26th of July. So it's actually a pretty significant barrier here at 1.2858, which is a resistance barrier that we can identify, which has been identified as a pivot. So we could potentially see bullish breakout for the cable out of this bearish channel, and should that occur, we can then target the pivot as a potential take profit zone at 1.2858. And let's see, when looking at stochastic and RSI, right, both of which did indicate a potential oversold condition as well. On Wednesday, 7th of August, right, we can see RSI dropping as low as 37.9 and stochastic dipping under 15, right, indicating a pretty decent oversold condition, right? Although RSI didn't drop as low as 30, right, but we can see these two highlight a potential oversold condition, and we saw cable itself stabilize at around 1.2675 and finding support within the bullish Ichimoku cloud, also adding as another contributing factor to a potential floor. And we did see a nice rebound over the last 2 days of last week, Thursday and Friday. Right, last Thursday and Friday we did see cable rebound quite nicely, and it is testing this upper trend line of the bearish channel. We may have a potential breakout here, opportunity here. We may see a potential breakout take place, and if it does break out of this bearish channel, we can expect it to rise up towards the pivot here. So the pivot can be identified as a potential take profit zone for any long cable positions that you may have, right? So even with the stochastic and RSI, we did see them indicate a oversold conditions on Wednesday and Thursday, right? Oversold conditions mean we can expect this currency pair to stabilize or find the floor and make a potential bullish reversal as well. So this is what looks like, which is something that has happened last Thursday and Friday, and today this week we may see a potential bullish breakout occur as well. Alright, so these are the key levels for cable. Alright, let's move on over to the commodities. Let's take a look at gold. We'll take a look at oil, and we'll cover the indices as well. Alright, looking at gold, right? Actually, if you look at gold, since 8th of July, it's actually just range sideways, right? It's found a lower bound. It's made a lower bound at about $2,360 per ounce, and the upper bound here at $2,470 per ounce. Right? Take note, this is the all-time high. The all-time high for spot gold prices was formed at $2,483 per ounce. Right? This took place on 17th of July. This was an intraday high, right? On 17th of July, and of course, since 9th of July, prices have just ranged between these two levels, right? So it enables us to play the bounds as well, or play the range as well, right? So as for example, after making this high here on 17th of July, and as gold prices were rising pretty strongly at the beginning of August, we could have used this zone here as a potential take profit zone for the long trade as well, right? Especially when it bounced off the first support. The first support is actually a pretty significant overlap level, right? We see a nice pullback resistance. Where is it? That's my brush. Here we go. We see a nice pullback resistance level here taking place on 21st of June. Price consolidating around here. In the second week of July, price finding support once more on 25th of July to bounce higher. So as gold prices bounce off this level here, this support level here on 26th of July, with a potential long entry opportunity here. We are playing the bounce of the lower bound, and then we are targeting the resistance level here, right? So this is important to establish the momentum, but you can see quite clearly the momentum is sort of neutral, right, with price trading sideways between two significant levels, a nice strong support at $2,360 per ounce, and a nice strong resistance, which is the pivot, at $2,468 per ounce, right? So once again, gold prices stabilized midweek, right, last week on Thursday and on Wednesday, Thursday, before staging a nice rebound, stabilizing at around $2,380 per ounce. So if we do see gold prices continue to rise higher this week, right, you can target a potential, or you can identify a potential take profit zone at around the pivot, which is at $2,468 per ounce. So we could see gold resume this this recent rise, right? It rebounded on Thursday and Friday, and we could see it potentially continue rising further, and then we can identify the pivot, or use the pivot to help us identify a potential take profit zone for any long gold trades, right? So it's still ranging between these two levels, and maybe it's something that can continue for the first half of this week as well, right? Remember, the all-time high for gold is at $2,483 per ounce, and the next major resistance level we're using a Fibonacci extension level to help us identify this resistance. Take note that we don't, right, the all-time high for gold was formed on 17th of July, right? Intraday all-time high on 17th of July. We have no other pullback resistance or swing high resistance that we can use, or that we can reference to identify the next potential resistance area. So in this case, we are using a Fibonacci extension, and this extension is found by running a retracement from here, this high on 2nd of August, going down to this low here on the 5th of August. The key extension levels are at 161% and 127%, but in this case today we're using the 161% to help us identify the first resistance, which is at $2,547 per ounce here, right? Okay, and okay, the cloud is also green in color here, which signifies some slight bullish momentum, although price is ranging between these two levels. But as the cloud transitions from red to green, it also indicates a bullish momentum for this commodity. And looking at stochastic and RSI, right, not really much. RSI is sort of mid-range, right at 50 last week, and it closed at around 56, where stochastic dropped as low as 27 on Wednesday and is now rising up as well. So quite likely we could see this precious metal rise up towards the pivot, which is the potential take profit zone for any long gold trades that you may have. Okay, hi, yes, okay, for your question here, should I wait until DXY and dollar franc are both on resistance at the same time before selling? Yep, that's a good way to do it. Yes, that's right, identifying the key resistance zones for both the dollar index and dollar franc, and then using that as a potential identification for entry, for a short entry, is a good way to do it. Yes, definitely, I would say, yeah, identify a major resistance area on the dollar index, and at the same time identifying a similar resistance area for the dollar franc, right? And when both of these line up, yeah, it gives you a much higher probability that we can expect a reversal to take place, and that's when we could see dollar franc pull back quite sharply as well. All right. Yeah, okay, I understood your question much more better now. Yep, definitely use similar resistance areas and support areas for the respective index and currency pair that you're trading, right? And then or that you're trading for correlation analysis, and then as each of them reach their respective support or resistance zones, that's where you could have a very high probability of a nice trade setup. Right, hope that answers your questions, yeah. All right, okay, now let's move over to oil, right? XTI USD is an instrument that tracks WTI crude oil futures, right? So crude oil has been in a strong downtrend since 5th July, right? We clearly see a series of lower highs, lower lows. Price was also trading within this bearish channel here, but it does look like we've seen a potential bullish breakout take place last Friday, right? And we see also the RSI indicator and stochastic oscillator indicate oversold conditions on Tuesday, 6th of August as well. That's where we saw crude prices stabilize at around $73.50 per barrel, which is also a region where it found strong support previously as well, right? We see a nice swing low support taking place here on 5th of June, right? Similar zone where XTI USD has once again found support last week, and at the same time we saw RSI and stochastic indicate oversold conditions, right? As price was as XTI USD was falling towards a major swing low support, and also with these two momentum indicators indicating highlighting a potential oversold condition, right? This should have been telling us we should be looking to exit the short XTI USD trade as well, right? As prices were falling sharply, we see a strong support zone here that occurred at the beginning of June. We also see the stochastic oscillator and the stochastic oscillator here and the RSI indicate a potential oversold condition, telling us that we should be looking to exit the short XTI USD trade, and which is where we can see, right, price did finally stabilize on Wednesday and stage a very nice rebound as well. And we currently have a potential bullish breakout scenario on hand, right? We've seen crude prices rebound very strongly in the second half of last week, and especially with Friday's price closing above the upper trend line here, right? There's a pretty decent upper trend line for the bearish channel closing above it. We've got a very high potential that this bounce in crude prices are likely to extend further this week, and we could see it reach the pivot here. The pivot is at $79.65. It's a pullback resistance level. We can see it clearly here on 26th of July and 31st of July. Crude prices or WTI prices running into resistance here, and it's another barrier which I think once again could be a zone where we could see crude prices stall once again, right? This level here also has the presence of a 61.8% Fibonacci retracement, right? Starting from here, this high on 5th of July, ending with the low here on 5th of August. The 61.8% retracement level sits pretty close to the pivot here, so we have a pretty strong resistance that begins from about $79.65 up to $80 per barrel here. Strong resistance zone here that can be identified as a potential take profit zone for the long XTI USD trade, right? And if prices do continue to climb even higher, right, if it breaks through the pivot here, the next major resistance comes at $83.28. This is a nice pullback resistance level here that took place on the 11th of July as well as on the 18th as well, right? All right. Hi Tijani, good to see you as well. Thanks for tuning in. All right, good to see all of you guys from all over the world tuning in for today's pre-market live analysis. All right, that's great. Truly appreciate that. All right, okay, so we've seen XTI USD make a potential bullish breakout last Friday, so we can expect crude prices to continue to climb higher. So should it reach this pivot here at $79.65, this is a good area to identify as the first potential take profit zone for crude oil XTI USD. And if it does continue to rise even further, then of course we can target the next potential resistance, which is at $83.28. This can be the next potential take profit zone for XTI USD. Right, let's look at take a look at the indices as well. Right, we'll take a look at DE40. DE40 is the instrument that tracks the DAX futures. Right, after of course the sharp sell-off at the end of July, early August. Right, we saw global equity markets stabilize on Tuesday and Wednesday, and we've seen them stage a pretty strong rebound on Thursday and Friday as well. So we can expect this bounce in DE40, right, to continue as well. And also when you look at the stochastic and RSI indicators on the daily time frame, right, on 6th of August, both of them lined up to identify high probability oversold condition, and is when it is also when we saw DE40 stabilize as well. We saw the DAX stabilize at around 17,300 and stage a very strong rebound, right? And at the same time, it was also finding support at around the 38.2% Fibonacci retracement, right? We found this retracement level here from this swing low on 27th of October 2023 going up to the all-time high. Take note, this is the all-time high for the DAX intraday all-time high here on the 16th of May, and we have a 38.2% retracement at around the 17,270 level. So as price was falling down towards this retracement level here, and at the same time we saw stochastic and RSI indicate a potential oversold conditions, we were expecting some sort of stabilization for these for the DAX, and it did happen on Tuesday and Wednesday, right? We see price consolidate, find a nice floor at around 17,300 before staging a very nice rebound. So we can expect equity markets to bounce higher this week as well, right? So we could see the DAX continuing to rise up, and this pivot level here at 18,166 is a pullback resistance level that has the presence of a 61.8% retracement. So this retracement was found by starting from here, this high on the 12th of July, going down to the low here on 5th of August. We can see the 61.8% retracement aligns pretty well with this pullback resistance. Remember, this was previously a pullback support that was in place from 2nd of July till 25th of July, but of course as price breaks underneath it, a pullback support level can now potentially function as resistance, which is the pivot, and we can target a potential take profit zone here for the DAX, right? Okay, now let's move on over to US 500. Right, so similar story here, right? US 500 as well. This instrument tracks the S&P 500 futures. It stabilized at around 5,165 on Wednesday and Thursday, and staging a very nice rebound, right? And you can also see there's a 38.2% retracement here for this strong uptrend. And at the same time, when you look at the stochastic and RSI indicators, right, on the daily time frame, both of them indicated or highlighted a potential oversold condition on Tuesday, 6th of August, right? And we did see the US 500 stabilize at around 5,180 and stage a very nice rebound on Thursday and Friday as well, right? So we do see on the daily time frame, right, daily and 4-hour time frame, the combination of RSI and stochastic really do help us identify potential oversold conditions and also sometimes overbought conditions as well. So similarly to the DAX, we can expect the US 500 to continue rising up towards its pivot here. The pivot has been identified as at 5,402, which is the pullback resistance. That also has the presence of a 50% Fibonacci retracement. Right, you can see here there's a this level here previously functioned as a pullback support at the end of July, now could potentially function as resistance, and it also has the presence of a 50% retracement level as well. So should US 500 continue to rise higher, we can identify a potential take profit zone at around the pivot, and should price as a maybe as the first potential take profit zone, and should price continue to climb higher, we can then target the first resistance as the next potential take profit zone. However, take note, I also see a pretty decent descending trend line for US 500 as well. I see a pretty decent descending trend line over here. So this is another potential barrier as well, right? So the pivot, combination of the pivot, the 50% Fibonacci retracement, and this descending trend line also highlight a pretty strong resistance barrier here. So I think it'll be quite suitable to identify your first take profit zone at around here, because we may see price really stall around this zone here, right? Actually, if you look at the 61.8% retracement as well, if I pull up the 61.8, right, we can see a pretty decent strong resistance zone here as well. Right, between the 50 and 60. Right, you can see here previously in 24th of June, right, third week of June, prices the US 500 consolidating at around 5,454, creating a pullback support level here as well. So this also aligned with the 61.8% retracement, right? Aligned with the 61.8% retracement, together with the 50% retracement, are identifying a pretty strong barrier here as well, right? So we've got the combination of the descending trend line, the 50 and 61.8% retracement levels, as well as this pivot here, which is a pullback resistance at 5,400, all highlighting a major resistance zone, right? So take note, first take profit zone for the long trade US 500 should be identified within this zone, and of course, should we see a nice clean break above the descending trend line, then we can then target the next take profit zone at the first resistance, which is at 5,573. All right, high side. Actually, yeah, I mean, if you have any requests for any analysis, do drop your request in the chat box here. I'll be more than happy to go through the analysis with you, like what Yaya and Ren have done as well, right? If you should have any questions or queries, you can drop them in the chat box, and I'll try to answer your question as well, right? As we come towards the end of today's session, I'm just going to launch a poll. I'd truly appreciate if you guys can give your feedback with regards to today's webinar. Alright, I just launched the poll. Truly appreciate it if you guys can give your feedback with regards to today's session, and then we'll wrap up with another one or two analysis. Alright, okay, so let's right, if there's no other requests, then maybe we can just let's see what can we do. We've done a couple of the indices, commodities. Okay, we can take a look at Bitcoin as well. Alright, let's take a look at Bitcoin. Right, right, so along with equity markets, Bitcoin has staged a pretty strong rally as well last Wednesday and Thursday, but it looks to have stalled over the weekend, right? Looking at it on Saturday and Sunday, it has stalled at around the 61.8% retracement level at around $62,000 here. So we can see this retracement was found by starting from here, this high on 29th of July, going down to the low here on the 5th of August. There's a 61.8% Fibonacci retracement that aligns pretty well with a pullback resistance here. Right, there's a pretty decent pullback resistance level, yep, around here. Oh, it's almost like an overlap, right? I see a nice overlap level actually. There's a nice overlap level at 63,789, right? And there's also a 61.8% Fibonacci retracement here. So the combination of the 61.8% retracement and this overlap level here at 63,789, right, helps us identify a strong resistance zone, and which is where Bitcoin looks to have stalled over the weekend as well, and is pulling down quite sharply today. And I see a pretty decent pullback support level at around 54,000, which is where the pivot has been identified, right? There's a pivot here, and at the same time there's another Fibonacci retracement at 61.8%. We found this retracement from here, this low on the 4th of August, going up to the high on the 8th. We can see that's a oops, hang on, where did we go? Yeah, starting from here, 5th of August and ending here on the 8th, we can see that 61.8% retracement aligns pretty well with this pullback level here as well, right? See a nice pullback level at around the 61.8% Fibonacci retracement, as well as there's another 61.8% retracement here on this uptrend as well, right? Starting from here, this low on 23rd of Jan, going up to this high here on 14th of March. This should be the intraday all-time high. We can see that there's a pretty decent support zone identified by this 61.8% retracement, as well as this pullback level here, right? So Bitcoin does look to be falling down towards this pivot level here at 53,974, and it could potentially stabilize around this zone once more, right? Similarly, when looking at stochastic and RSI, both of them indicated or highlighted a potential oversold condition on Monday, 5th of August, and we did see Bitcoin stabilize after that and then stage a very strong rebound, particularly on Thursday. But however, it seems to have run out of steam on Friday and over the weekend, and looks to be pulling back towards the pivot once more. Alright, okay, okay, hi HSL, did I cover, okay, dollar yen, okay, no, we didn't cover dollar yen. Alright, let's wrap up the session by looking at dollar yen for sure. Let's do that, right? So we can end the session with dollar yen. Right, okay, so of course, combined with intervention measures by the Bank of Japan in mid-July, along with the hiking of interest rates on 31st of July, right? Wednesday, 31st of July, there was a monetary policy statement announcement by the Bank of Japan where they raised their key policy rate once again, bringing it up to I believe 0.5%. I think. What is it? Let me check. I can't remember. Okay. Well, yeah. So okay. So Bank of Japan raised its interest rates on 31st of July while announcing a bond tapering program as well. Combined with the prior intervention measures, has really propped up the yen, right? When dollar yen is falling like this, it means the value of the Japanese yen is in strong demand. So we're seeing the value of the yen rise very strongly over this period, with dollar yen dropping as low as 141.69. But once again, we've seen that stabilize on Tuesday and then staging a strong rebound on Wednesday. But Friday we saw dollar yen pull back a little bit. But after such a strong move down, right, we can probably expect some retracement to the upside. So perhaps we can expect dollar yen to climb a little bit higher as well. And similarly, when you look at it on the stochastic and RSI indicators, right, especially on Monday, 5th of August, with RSI dropping under 15, stochastic oscillator dropping under 10, both of which indicating extreme oversold conditions. This is where we did see after that on the next day, the subsequent day, we did see dollar yen stabilize at around 144 before finally staging a sharp rebound on Wednesday and then on Friday, Thursday as well. But Friday it looks to have stalled. However, I think this the currency pair could continue to rise higher, and there's a pivot that's been identified at 150.79. This is an overlap resistance here. We can see previously dollar yen running into resistance here on beginning of March, after which it proceeded to function as support, creating an overlap level in mid-April which is now potentially going to be a resistance barrier here as well. And if we look at all the retracement levels, take a look at all the retracement levels here, right? We do see there's a 38% here, 50, 61. All right, we can see dollar yen has has already climbed above the 23.6% retracement level, so quite naturally we can't use that, but we could potentially use the 38% retracement and identify another resistance zone here between 149.43 and the overlap at 150.79. So let's just keep 61 and 38. Right, okay, there we go. Right, so we could potentially see dollar yen climb higher. However, any retracement to the upside is quite likely going to stall around the pivot. Right, take note, we've got a strong overlap resistance level at 150.79. We have the presence of a 38.2% Fibonacci retracement, and at the same time we have the presence of a bearish Ichimoku cloud. Right, remember, dollar yen continues to trade underneath the bearish Ichimoku cloud. The cloud itself can function as a resistance zone as well, which is within which lies quite close to the pivot and the 38.2% retracement. So we could see dollar yen retrace higher, especially after such a sharp sell-off. Right, we can expect some retracement to the upside, right, as short traders close out their cover their positions. Right, as short traders cover their positions, it can stage a pretty decent rally as well, right? So this is what we're probably seeing. We're probably seeing a combination of short covering that's driving dollar yen a little bit higher, and this retracement to the upside could potentially continue this week as well. But however, I do see a strong resistance area that's being identified by the 38.2% retracement, the overlap resistance, which is the pivot, and of course the bearish Ichimoku cloud as well. All right, that's all I've got for today. Right, thanks everyone for tuning in to today's session. I hope this has been a great webinar for all of you, and take note of the calendar for this week as well. Of course, we've got the RBNZ on Wednesday, 14th of August, 2 a.m, where they're expected to keep their cash rate on hold at 5.5%. However, the statement and press conference could convey a dovish outlook on future monetary policy action, which may be enough to cause the Kiwi to come under pressure. And of course, we've got inflation data out of the US on Tuesday, with PPI on Tuesday, 13th of August, 12:30 p.m. and of course with CPI on Wednesday, 14th of August at 12:30 p.m. GMT as well. So if we do see another round of softer than expected inflation data out of the US, this is quite likely going to cause the dollar to come under pressure, and we could see the dollar index pull back towards its pivot here at 102.66. All right, that's all I've got for today. Right, thanks everyone for tuning in to today's session brought to you by IC Markets, and do look out for all upcoming webinars for the rest of this week. Right, we've got another live analysis session at 9:30 a.m. GMT later today, and we've also got a couple of educational topics on Tuesday and Wednesday as well. All right, thanks everyone for tuning in. Have a great week, and I wish you all the best in your trading journey. Right, thanks everyone.